So we have Maria here. Hi, Maria. ¿Cómo estás? Welcome to the podcast, our first podcast of Derek Newell Unplugged in collaboration with Miami-Dade College here at the Doral campus. So I would like to first people to know who you are. So tell me a little bit more of yourself, who you are, your background.
Sure. First, thank you for having us, and thank you to Miami-Dade College for the invitation. So a little bit about me professionally is that I've been with Partners for Self-Employment going on 23 years now.
Wow.
So Partners for Self-Employment, for those that are not familiar, is a local nonprofit that concentrates on providing training, technical assistance, and access to capital to small businesses predominantly owned by minorities or individuals of a lower income. That's basically our focus.
And what inspired you to start with Miami? I mean, for partners with Partners for Self-Employment.
So what inspired me was actually need. So I started off in the for-profit sector, Fortune 100 company, all of the big things when I was in my youth, and company moved to Atlanta. I didn't want to move, and a headhunter that I reached out to and said, "Hey, I need a job." Said, "Oh, we'll find you something in your field," which, by the way, was not nonprofit financing. But we need you to hold this seat warm for a minute because the person that we had in that as executive director in that location didn't work out.
And so this happened, what, 27 years ago? Is that it?
23, well, right after September 11th. So how long ago
Oh,
was that? 24 years?
24, right?
Yep, so 24 years. I interviewed on September 27th of that year.
So one of the biggest challenges, and I'm talking for myself as an entrepreneur, it's funding. Like always, and especially if you're starting out and you are coming from, not a background of money or access to capital. It's always so hard. It's always so hard for us to get along and find, let's say, if you go to a banking system, they're going to request or require all this documentation that normally people don't have. With Partners for Self-Employment, is the same process, so how the process works?
So we specifically designed our programming not to compete with the banks. So what we want to be is a stepping stone to the bank. So our applications are going to look a lot like banking applications simply because we want to get our clients used to having to fill out those documents. The real difference between us and a bank is, one, we don't have the credit score floor that a lot of banks have. And the second thing is that while the application is going to look a lot like a traditional bank application, there is some assistance that we can provide in completing those applications that you're not going to get at a more traditional financing institution.
And this is very important because the other part of the story of after you get, if let's say you break through the bank system and you get a loan, so the interest rates are always so high. Tell me a little bit more about your interest rates, because I think that will be very interesting for entrepreneurs to learn about.
Yeah. So we, again, are not in a position where we want to compete with the banks. What we want to do is we want to get individuals who would not normally have access to capital due to credit or income access to the financing system. So we've purposely kept our interest rates very low. We do have programs that are lower than 4%, but our traditional loan, which is a loan that's available to individuals that are even just starting out, and in a lot of cases without checking credit, our interest rate is 4%, and it's a standard 4% across the board. We have programs like Miami Open for Business, that I'm sure we'll talk about a little bit later, where the interest rate is a little bit lower at 3%. But we purposely have kept the interest rate low to keep it accessible, to keep the funding accessible to the individuals that need it the most.
And how is the Miami business environment at this point in time? And there's a lot of politics going on. A lot of the situation is kind of uncertain for many. So how do you see Miami growing as an entrepreneurial, like an entrepreneurial hub? What is going on from your perspective with Miami's businesses?
So traditionally, the Miami business environment has been very immigrant-led, low-income, individual-led, Hispanic and Black entrepreneurial-led. So we are seeing some differences now over the last couple of months where we are having to be a little more careful about some of the individuals that we're funding, because things like actively seeking status is no longer something that we're allowed to fund. We got to keep in mind that most of our funding, about 95% of our funding, is federal funding, whether it be direct federal funding or pass-through funding through a municipality or a county or something like that. What I anticipate we're going to see quite a bit of is, just because of what's going on, nationwide, is we're going to see a lot more businesses moving into our area. We're going to see some different businesses moving into our area, which on the surface seems like a really great opportunity for South Florida, and it is to some extent. But what we fear is going to happen is it's going to displace some of our pre-existing small and micro businesses. So micro businesses are those that are under 5 employees, making under $100,000, maybe $120,000 a year, that are more mom and pop, and those tend to be the ones that are really minority led and family type businesses. And those are the ones that we see suffering the most, unfortunately.
What is the right amount for a business starting from scratch to start up with? I mean, in terms of what is the money you think? Because as entrepreneurs, that what happens a lot to us as well is sometimes the funding is never enough or is not enough. So you stay short, because even though if you want to help, I know you have your framework and you will stop at a certain limit, right? But the entrepreneur is going to need more just to, to walk through this burnout, if I can call it that way, of just looking and searching for money. What is a good amount you think an entrepreneur should have in mind to start a business? Let's say, and I know there are different sectors, but let's say if a restaurant, because I'm pretty sure that's one of the loans you will be having a lot of demand for, especially in Miami. But what do you think is a good amount to start a business with here in Miami?
So that's a really difficult question. I can tell you that the wrong amount to start a business with is anything you can give me, which is what entrepreneurs usually say when they come into our office and we say, hey, how much are you looking for? They turn around and they say, as much as you can give me.
That's how desperate they are.
So that's the wrong amount to start with.
Okay.
As far as the right amount to start with, that's really going to depend, as you said, on the sector, right? So one of the things that we usually have to send clients back with homework to do is really sit down and think about what this business is actually going to cost you and what your income and expenses are going to look like over the next 12 to 18 months. And we also have to be very cautious about the fact that we are funding a business, not an individual's lifestyle, right? So your rent, your personal car note, those things are not part of this business loan. So a lot of times we have to send the entrepreneur back with, hey, how much is this really going to cost? How much are you, what's your income and expense over the next 12 to 18 months, so that we can determine, one, if we're the right lender for you, because a lot of times we may not be the right lender for you. Like we have certain programs where we can lend up to $100,000, but most of our programs cut off at about $25,000. So there's a few things that can happen. Either we can bring in a partner agency to fund part of a loan, which we've done and are happy to do. Or we can say to the client, okay, let's look at what your overall goal is. So let's say your overall goal is a restaurant. But right now you don't have any savings. We can only come up with a certain amount because the restaurant isn't open. We can't bring any other partner agencies to also leverage funding from. So maybe the idea is to start with a food truck. So let's look at how we grow you into what your ultimate goal is, if we cannot fund the goal in its entirety right now. That happens a lot with individuals who are coming to us that don't have another source of income. Credit is not enough to go to a more traditional lender. So we can't, how do we justify lending $100,000 to open up a restaurant where you've got really you don't even have the location, you don't have the concept, you don't have menus, you don't have recipes, you don't have all of these other things. So it's easier to start with a smaller amount and kind of massage your goal into that smaller amount and then look at growth.
What is the time you think a business takes to be profitable?
So we've seen some businesses that are profitable right away,
Wow.
which is great. A lot of times those are individuals who've had some very specific experience in that particular industry and kind of come with a client base or that sort of thing. But we've also seen clients that take up to 3 years. Usually at about a year, at the year mark. So one of the things that we do is we track job creations, job retentions, and increases in revenue over a period of time. So while we may have some more non-traditional type of lending requirements, right? We're not looking at credit. We're not doing these different things. You are actively participating in what's our research model. So you are giving us information over a period
Right.
of time. So there's right around the year mark, we know if a business is going to be successful. Even if there may not be making, a lot of revenue at that point, or maybe not even profitable quite yet, but we can see the trend. So we know right around the year mark whether or not we got to start worrying about that loan repayment or not.
All right, so you kind of stick to the vision of
Yeah.
that business, which I think is so important to see the vision, because for me it's about to be a profitable business. It all depends also on the vision, because this scalability of the business. If you have a really small business, in my experience, let's say a bakery or a small restaurant or food truck, even maybe before the year is going to be profitable, because that's the main goal. It's the food truck. That's
yeah.
it. That's it. So whatever you sell there, right, you make your money back, and it's just going to be kind of a transactional day-to-day business. When you're trying to scale a business to certain levels and go big or go home, sometimes it takes a longer time for it to be profitable.
Yeah.
That's in my experience, but it's good to know that it depends on where you want to be and when they come to you with that loan. And I'm pretty sure you receive all kind of requests of visionaries and small businesses. And let me ask you, who are the people, who is the entrepreneurs that come most to you?
This service-based entrepreneur. So the entrepreneur that does lawn service, pool service, hairdressers, nail techs, massage therapists. So those service-based individuals are the ones that are the ones that are looking for the more non-traditional loan, because they don't really have inventory to put up as collateral anywhere. For the most part, they don't have a location. A lot of banks want you to have a freestanding location. You don't have, like I said, inventory because you don't need it. You haven't really created credit for yourself, because in a lot of situations, there isn't a whole lot of supplies or merchandise to buy. So they need a non-traditional lender that's going to look at them without business credit. And is going to be able to do a smaller dollar amount, because for the most part, those individuals are needing $10,000, $15,000. Servicing a loan is expensive, so a bank isn't necessarily going to give you a loan for $10,000 or $15,000. They'll give you a 24.5% interest rate credit card with that amount of money on it, but that's not financially what you want to be doing for your business up front.
No.
Anyway. You want to create credit, and you want to do that at the lowest possible cost for dollar that you can. So those are the ones that we see the most of, and also they're the ones that are the most profitable quickly.
There was a question that just popped up in my head. It's Miami, especially Miami, not just Florida, but Miami, specific Miami. Most immigrants that come to Miami, I don't know, but there used to be, probably it still is, they're Latinos, they're Hispanic people.
Right.
So I'll say, your base consumer or customer in this case should be the Hispanic community. And my question is, with all these laws in place and like all the policies, say like immigrants seems to be not that welcome right now in this country. Do you really believe Miami is going to keep growing, or is it just going to come immigrants or they're just going to migrate from a different state? How you see that?
So first, our primary customer is Hispanic, but also Black American.
Okay.
Those are our two like primary customers. We of course welcome individuals of Haitian descent and European descent, but our primary customer is Black, African American, and Hispanic. With all the laws that are coming and the immigrants, the situation with immigration, what we are seeing are individuals, of course, that are concerned. But do I think that they're going to stop coming? No. And do I think that they're not that individuals of Hispanic descent are going to stop their businesses or close them down? For the most part, no, because most of them, that is their only source of income. So many Hispanic entrepreneurs, when they come to this country, they start a family-based business, right? So the sole income of the entire household comes from that business. The dad starts it, the mom works there, then the two kids work there. So shutting that business down for the most part really isn't an option. So while there is some concerns, and we have them as well, right? I don't think that it's going to long-term affect what our primary customer looks like.
To add to what you just said, I think this is a country that's based on immigrants, and this going against what is the essence of the country. I think it's going to be hard. I think, as you just mentioned, at the long term, it's not going to be possible. That's how I see it, right? Because at some point, you're still going to need that flow of people. That the way how an economy thrives, especially here in the U.S., is the small and small and medium businesses. Those are the ones that really drive the economy of, in this case, the community and the state and the city. So I don't think to a long term it's going to be sustainable. That's what I think. I believe there are a lot of facts to support what I'm saying, but you never know. However, what about Miami Open for Business? Miami Open for Business is I got to know about Miami Open for Business because I applied to a grant. And how is your connection to Miami Open for Business? What is your partnership there? How it works?
So Miami Open for Business is an initiative funded through Wells Fargo. So Wells Fargo, the bank, funds the initiative. They fund specifically the Miami Foundation. Miami Foundation created a series of programs taking into account what the community needed. They went through a series of roundtables, spoke with industry professionals who said, hey, what we need are loans for entrepreneurs, we need grants for entrepreneurs, we need to have a pathway to own property for small businesses so that they don't continue to be priced out of their locations. So Miami Foundation created this series of programs and then put out an application that said, hey, if you do this sort of work, apply to be one of our partners. So we applied and we partnered with Miami Foundation, again, funded through Wells Fargo. We did the nonprofit loans, the for-profit loans, and the for-profit grants. And then Miami Foundation did the other programs in-house for themselves. So our partnership has been extensive. It has been very hands-on. It has been a 3-year relationship that we were grateful to be able to participate in, from planning through execution. And now that program has closed. That program sunsetted on December 31st of last year. So now we are basically supporting small businesses through asset purchases and investing their loans and that sort of thing. So it was good.
So this program is not going to be back.
So no, not exactly as it was originally designed. Will other banks jump on the bandwagon? We're hoping so, because philanthropic dollars allow us to do things a little more creatively than federal dollars. So one of the things that PSC does well, but also limits us, is access to federal dollars, right? So being able to access something that's more philanthropic lets us be creative. We were able to give loans to individuals who were seeking status. We were able to give grants to individuals that were seeking status in the U.S., but had businesses. So we were able to do that. That's something that we can't do with federal dollars. So we are hoping that other banks realize that there's now a gap in our infrastructure, not just ours in Miami, but nationwide. There's now a gap in infrastructure. So services and financing that was made available to individuals that were not already lawful permanent residents, there's now that gap. So we're hoping that other foundations jump in on it.
Well, I hope so too, because I think at the same time, as people don't understand, let's say, in the government, USAID, they don't understand the soft power that they represent for the U.S. as a government, as a country, representing abroad, overseas. I think for institutions as Wells Fargo or other institutions as well, to fill up that gap right now is kind of another way of marketing of soft power, because they're serving the community, they're doing something good. So it helps the business ecosystem. That's how I see it. And also, I think I'm a lot into branding and stuff, and I think there's so much power in that name, Miami Open for Business. There's so much power just there. They're telling you a complete story just with that name, and I love repeating it. It just sticks to your head because and the good what they're doing. So like if you think of someone doing something good, in this case I'll say is Maria, right? That's the face. And also what the impact you've been having with the community. So Maria, me personally want to thank you for the service you've been giving to this community, because I'm part of this community, and that's the way how I met you. And I can tell just people the good of Partners for Self-Employment and all the service you've been doing for the community. So I want to tell you in this podcast right now, thank you so much for all you've been doing for the community here in Miami.
We appreciate it, and it really is our pleasure because we're part of this community too.
Yeah.
So this community is thriving. People being able to, increase their incomes. People being able to afford, cost of living today, which is no joke. Being able to augment their income, even if their business isn't a full-time business. Sometimes, just being able to see your own community thrive is definitely well worth the work.
Is rewarding.
Yeah.
It's kind of, I'm pretty sure it's part of your mission. It's part of your vision. That's so important to have success, because 23 years or 24 years into business, it's no joke. It's not easy to do, especially most entrepreneurs, when they start, they're trying to build a team, and they go like, because they're wearing all the hats. And one of the parts is so difficult for entrepreneurs is to do it all. And by wearing all the hats, I mean they're doing their numbers, they're doing their marketing, they're doing everything, and sometimes understanding how the numbers work, a spreadsheet, balance sheet, is hard for entrepreneurs that are just starting. It's just very difficult. And I can tell you, because of my experience, that you walk them through the process, which I think is so important, because you have the patience, and it's part of your what you're doing, of your mission and your vision. So once again, great job you're doing. Maria, have to end the podcast, where people can find more information about Partners for Self-Employment.
So if they want information on Partners for Self-Employment specifically, there's partnersforselfemployment.org. And even though Miami Open for Business is closed, if somebody would be interested in seeing like what businesses got funded. So one of the things that we're big on is introducing people to opportunities. So like you just mentioned, people are doing everything themselves.
Yeah.
So if you get to the point where you realize that you need a marketing professional, well, if you go onto the Miami Open for Business website that is still open, it's miamiopenforbusiness.org, and you go in and you look at like the businesses that have been served, you've got like potential partnerships there. So we definitely encourage people to take a look at that site as well. There's also a lot of resources posted on both sites. So one of the things that we're big on is understanding who the right service provider for you is. And we're not going to be the right service provider for everyone. And we don't want to be the right service provider for everyone. So one of the things that we provide on both of those sites is other resources that you can stack with our resources, or that you can, if we're not the right fit, that you can find another appropriate fit for your business.
Before we end this episode of this podcast, I want to ask you, when someone comes to you, you look at the entrepreneur, you look at his will to thrive, or you're looking just at the numbers, or is a combination of everything? What do you look to? What is the main thing you're looking for?
So it depends on where the entrepreneur is in their journey when they come to us.
Right.
So if you come to us looking for a $100,000 loan, we're going to be looking at numbers first.
Sure.
And then, the entrepreneur second, experience, that sort of thing. If you are just starting out and you're looking for a $5,000, $10,000 loan to buy a massage table and some massage oils, we're looking at, do you have the credentials to do that work? And then what your plan is, because at that point you don't have any numbers for us to really look at. And if you do have some numbers, we probably don't want to see them because they're not going to be cute. So at that point we're looking at, what's your plan, right? Who's your market? Do you understand who your market is? Do you understand how to price your product or your service? And then, what experience you have that gives you the credentials, what licensing, if you need it or whatnot, you have in order to perform that function. So it really depends. What we're looking at depends on where you are in your journey and how much you're looking for. So we have what we call hope and prayer loans. You hope to get a loan, I pray to get paid. Those are for people that are starting out, and there we're looking at your plan and kind of your credentials, right? And then we have those expansion loans, which are ones that individuals can take advantage of to expand a contract, introduce a new product into their lineup, that sort of thing. There we're looking at real numbers.
So finally, what piece of advice do you have for Miami entrepreneurs?
If I could give people one piece of advice, it would be to understand where you are and where you want to go. So understanding where you are is financially, what can you handle? Where you are in business, what your actual need is, and what you bring, what you already have for that need. And then understanding also that there's going to be certain limitations, right? So if you are credit challenged and you are finance challenged and your experience challenged and you've got all these challenges, what you're going to be able to qualify for is less. So understand where you are and then understand where you want to go so that we can help you get there, even if it's in increments. And also take a look at all of the service providers. One of the things that Miami has done well, in my opinion, is we have a lot of service providers. So there's a lot of nonprofits that do entrepreneurial training, they do technical assistance, they do lending, they do what we call access. So they'll introduce you to lenders. And then, places like Miami-Dade County, City of Miami, City of Doral, they also fund these lenders and these technical assistance providers in order to provide you services. So you don't necessarily have to go somewhere where you're going to pay for professional services if you take a look at the service providers that are being funded through some of these programs. That's the reason why some of us can keep our costs so low. And one of the reasons why, we can do interest at such a small rate.
Thank you, Maria, for being in the program. Sure. And thank you, folks, for watching. We'll see you in the next episode.